Welcome to TradingPub.com's morning report. Real quick before we get started, give you a standard risk disclaimer. As you know, when you start talking about futures and options products, there is substantial risk involved. We're not making any kind of recommendations here, just kind of going over some thoughts over some of the different markets that we watch throughout the week. Alright, we're back for our daily market videos after, for us, what's been a couple of slow days. I know we've got a lot of friends and Trading Pub members up on the East Coast that are dealing with Sandy right now, and our thoughts and prayers definitely go out to you guys. What we thought we would do today is just kind of go through a couple different markets. Now, taking a look at the gold market, and you know, we talked about gold a lot last week. We're still bullish on gold as long as we're above 1690. Basically, what you saw on gold, here's a daily chart, and I'm going to kind of scroll in a little bit, but what you saw on gold here is we've held that 1700 area, bounced, we broke out above 1720, came up to about 2650 or 2660 yesterday. So far today have been to 2750 and have now come back down. Now this is our thought on gold for the rest of the day at least, and you know, very short-term view. We've got non-farm payroll to numbers coming out tomorrow, and obviously, you know, that number is going to have a big effect. So our guess is that we see a pretty slow day for the rest of the day, not only in gold but also in the overall market. You know, you've got S&Ps up, you've got the Nasdaq up, and so, you know, we've had a decent little move so far. If you know, we had to wager on it, we'd bet that it's going to be a slow rest of the day. We actually, you know, we did a big session on Nadex recently, and let me resize this a little bit. We did had a big Saturday class on Nadex that's on our website. If you go to TradingPub.com, click on Free Education, and on the drop down you'll see a box that says Nadex. And so we had that, and a trade that I've actually been doing the past 2 days. Now keep in mind, or I guess the past 3 days now, that we're now into Thursday, but with the markets closed, we had the index futures closed, but gold remained open. And so kind of our thought with that, and we talked about this Monday on the live trading session, was with gold open and the other markets closed, we thought that gold would really be pretty muted as far as the type of move that it would have in a day. And so a strategy I've been doing this week is looking for some opportunities of taking a gold position and really kind of playing a range. And so, like, basically you see the position I've got on today, and again, it's not a big position, but position I've got on today is basically a trade for gold to be above 1712 by 12:30 today, and I bought that contract at 81. Okay, so bought it at 81, currently at about 80, so it's about even on it. But basically what I'm looking at here on this option contract is for gold to stay above 1712. If it does that, this binary option will expire at 100. So again, if I buy it at 81, it expires at 100. That's a $19 profit per contract. You see, I've got two on, so again, definitely not a big position. And I've got another position on for gold to be above 1730. I actually shorted that contract at 11.25. So I'll pick up 11.25 times 2 if gold stays below 1730. So again, these are a couple of small trades, but again, I've been doing it pretty much each day this week because I think gold is going to stay range bound because of the non-farm payroll. Now, does that mean that every day I just want to come in and put a bracket on gold and try to make money? No, because eventually you'll get burned. So kind of my thought process here was earlier this week, the reason I feel like this trade worked was because the other markets were closed, and so gold had a much smaller move. It was going to stay in a range, which it did. If you look at gold on Monday and Tuesday, it was, you know, in a couple point range, didn't move much at all. And the reason I feel like this is a decent trade today is the fact that we've got non-farm payrolls tomorrow. So really I'm looking at range-bound trading today, and then tomorrow I probably won't take this trade. You see, I took a shot there. I bought the gold above 1745. That's actually for tomorrow's expiration. I felt like gold was kind of breaking out. Thought I'd take a shot. That way, if we get a big bump on non-farm payroll, basically it's a you know, pay $9 to try to make $91. So again, you see, typically when you buy a lotto ticket, this is what happens. You see that? So bought it at 9, currently trading about 150. Now, obviously, if gold ends up being at 1750 tomorrow after the report, that'll be great. But again, this is a good lesson. When you buy a lotto ticket, that's the odds of you winning, and that's what we're seeing right now. So what I'm looking at more now is I'm watching these two trades, and let's talk about how I'll manage these trades in the event that they don't go my way. So obviously one of these trades will work out. So Gold can't be at both 1712 and 1730 at the same time. So looking at gold right now, you see gold's at 1720. So I'm looking at gold. We've got a high yesterday at 2670 or 60, a high today at 2750. If I start to see gold take out the high of the day, I'll look to either roll that contract out or exit the trade at a loss. So if I see gold take out the high of the day, then that means that this contract at 1730 is going to be in trouble, and I'll look to exit that trade. Now, if I see gold start to take out the 1714 area, so again the 1714 area on gold, then I'll have to make an adjustment to the downside. So what I try to do is pick a couple of points before it gets to my strike price and look to get out. If gold were to trade at 1730, that contract at 1730 would be trading at 50. So the contract that I sold at 11 would be trading at 50, so I would need to get out of that contract. What I don't want to do is take it down to the wire and end up losing $90 a contract. Kind of like a credit spread. You don't want to, even though your risk is defined, you don't want to take a full loss. So again, I'll keep an eye on that. But my thoughts are that gold's going to be kind of range bound through the rest of the day because of the non-farm payroll report. So that's a look at gold. Looking at the S&P, we'll look at the S&P, then we'll look at bonds. And so I'll just come in here. You see S&Ps are making highs. We're above 1420. There's pretty good resistance here at 20 to 22. The next big resistance I'm going to look for is 1430 to 1433. So again, I'd be surprised if we got up there today, that 1430 to 33, but again, I'm looking at that as big resistance heading into the non-farm payroll report. The reason that's big resistance is it was the big support we were watching last week before we broke through it. So we'll look at that as the big resistance. Obviously, we still got that 90 to 92 area as the major support area on the swing basis. And the last thing I want to look at is the bond market. And if you guys were with us Saturday, you had the opportunity to hear from Tony Laporta, one of our commentators. And again, basically, I threw up a bond chart and I said I'm completely deferring to Tony. And what you're looking at here, and Tony even said this, he's stepped away from the bonds the past several weeks because it hasn't been much of a trade. If you watch this during non-farm payroll tomorrow, there will be a good trade. So again, bonds should be active unless, of course, things come in just as expected. But bonds should be active and will be a key thing to watch tomorrow during the non-farm payroll. You look at this 150 area, and this is something to think about. You have a top here at 150, a top here at 150 and change, and so there's going to be a lot of people. There are a lot of people short the bonds, and there's going to be a lot of people, more than likely, that are short the bonds that have a stop above this 150 level. So I think if we see non-farm payroll come out, if we see this 150 level tested, we'll probably get a stop run here in the 150s that could possibly take us up to 151. So again, I'll see if possibly tomorrow on the video after non-farm payroll, maybe I can get some thoughts from Tony on it. He's definitely much better bond trader than me, but there's just a couple things, just kind of a common sense look. If you see the bonds get close to this 150 level, you got to think a lot of these people that are short, that have been short bonds, are short with stops above there. So keep that level in mind. All right, everyone, hope you have a wonderful day. And again, we've posted a lot of recordings on our website. If you go to tradingpub.com, click free education, and click the free education right here, and choose futures, Nadex, options, reviews, stocks, or Forex. But again, posted a lot of really good education. A good friend of mine recently did a presentation talking about using order flow to trade breakouts. That's a very good presentation. We've got the recording on the website right there. So again, you can go to tradingpub.com, click free education.